Okay, let's look at cost behavior. So an airline uses the new Airbus A380, and on an aircraft of this size, 6 air hostesses are required per flight. So is the cost of the air hostess a fixed or a variable cost? Well, it depends. So if you're looking at the passengers on the flight, so that in individual flight tickets as the cost object, then it's a fixed cost. So as more passengers board the flight, the cost of the air hostesses stays the same, 6 air hostesses per flight. If the cost object on the other hand is the flight, so each flight, so from here to New York or from Cape Town to Australia, then the air hostesses are variable. So for each extra flight we add to the airline, the cost of the air hostesses will increase in direct proportion to the number of flights. So it depends on the cost object. Let's look at another example. The Funky Fashions manufactures jerseys for a large retailer. This specific retailer requires Funky Fashions to manufacture at least 2,000 units or 2,000 jerseys to purchase at their option. So they don't have to buy all of it, but Funky Fashions has to at least have 2,000 available for their purchase. Funky Fashions can try then to sell whatever the retailer doesn't buy. So here we have the costs. It's rent, 1,000, labor, permanent workforce, 500, materials, 800, and variable overheads, 400. So that's a total of, how much is that? 2,700 Rand for the 2,000 jerseys. So for the purpose of calculating the break-even units to be sold to the retailer, which of the above costs are fixed costs? Okay, rent is usually a fixed cost, permanent labor is a fixed cost. Usually materials is a variable cost because as you produce more, you spend more on materials in direct proportion. And same with variable overheads. But in this case, you must be careful. They have to manufacture at least 2,000 jerseys. Regardless of what they sell, they have to manufacture 2,000. So in this case, all of the cost, the full 2,700, is a fixed cost. Now let's look at step costs. So in this example, we give the contribution of 40 Rand per unit, and then fixed costs of 5,500 Rand. Included in the 5,500 is a 1,200 relating to a step fixed cost. In the table below, they give you the number of units for each step up or range, and then the cost relating to the number of units. So at the current level, the current production of 240 units fall in this range, 200 to 250. So that's where that 1,200 comes from. And remember, that's included in the 5,500. So what is the break-even number of units? Okay, the first step is take the current fixed cost, or at the current level, and calculate the break-even. So currently, the fixed cost is 5,500 divided by the contribution of 40. That gives us a break-even of 138 units. The next step is to see, does that fall in the current range? Well, the current range is 200 to 250. So 138 break-even is outside of that range. So now we repeat the break-even calculation at the correct level, where the 138 fits in. That's between 100 and 150. So if you look on your page, 100 and 150 is a cost of 800. Now remember, included in this fixed cost of 5,500 is 1,200 for the range of 200 to 250 units. So we have to deduct that from the 5,500. Then we have to include the step cost in the current range where our break-even of 138 is. So that's 100 to 150 units, 800 Rand. So our new fixed cost will then be 5,100. We divide that by the contribution per unit, we get a new break-even of 127.5 units. If you round up, 128 units, if it's something that can't be divided. That fits in the range of 100 to 150, where this 800 step fixed cost came from, so that's the correct break-even. Sometimes the cost is both fixed and variable, or it includes a fixed and a variable component. Like for instance electricity. There's the fixed cost that you pay per month, and then the usage per unit. Or telephone cost. There might be a line rental or rental of the equipment, and then the cost per minute or cost per phone call. How do you identify mixed cost? Well, it's easy to test if you have the units or the volume or activity level. If the cost increase in direct proportion to the activity level, then it's a variable cost. If it doesn't increase at all or doesn't change if the units change, then it's a fixed cost. If it's neither of the above, then it's a mixed cost. So how do we separate a mixed cost into the fixed and variable components? The high-low method. There's other methods as well, but the high-low method is the most common and the easiest to perform. And you need to be able to do it. You didn't do it in the second year. Now remember, it's vitally important that you know when and how to use the high-low method, because you won't be told to use it in this year or in post-grad. You have to figure it out yourself. And that's always a few marks that's free in a paper. Then just remember to use the two data points relating to the highest and lowest activity level or units, not the highest or lowest cost.